Hello guys, happy Thursday. It's that Dividend guy here coming at you with another dividend investing video. I'm super happy. We just keep rolling. So let's take a look at how we've done on past performance wise, and then we'll go through, break down the individual holdings. And I think that'll be it. I haven't added anything to my watch list, so I do apologize that I'm keeping pretty strict on what I'm looking at. So videos might be a little shorter from here on out just because I'm trying to add less to the watch list. So let's take a quick look and see how we've been doing. So for today, we are up about $85. On the week, we're up $235. For the month, we're up almost $300. On the 3-month mark, we're up $2,000. On the year, we're up $2,700. And all time, we're up $2,471. So pretty good. Let's go ahead and look at the individual stocks to see how they've been performing today. So I have 98 shares of Altria. I do believe I get a dividend from them tomorrow. A total of $81. They are average costs on Altria is $45.25. They're 28% of my portfolio. Today's return, we're up almost $50. Total return, we're up $515. So that's phenomenal. And like I said, I will be getting a dividend from them tomorrow, and I'll be reinvesting it, and I have about $30 left after reinvestment. So that should be fun. Next, we have Coca-Cola at 17 shares, average cost $51.10, 5% of the portfolio. We're up $16.83 today on 17 shares. Total return, we're up $72.10. So that's a pretty good return on just 17 shares of Coca-Cola. So let's go to the next one, AT&T. This one dropped a little bit. That's good. Hopefully it drops a little bit, a lot lower because our average cost is it's pretty low. So we have 62 shares. Average cost is $31.10. We have 14% of the portfolio. Today we lost $3.10, but over the long term we are up $477.42. It's a lot of shares. AT&T's been running up. Hopefully they come back down to earth soon because I really do want to reinvest into this company, but I haven't been able to because of how much it's run up. Same story here with AbbVie. It's at 90.21. I bought it at 72.22. I have 60 shares, 31%, almost 32% of the portfolio is in AbbVie. Today we are up $40.40. In the long term, we're up $1,079.24. So that's awesome. Almost 25% return on AbbVie alone. Next, we have SKT. This one is a smaller position I just initiated with dividends in the last month. So I'm pretty sure I bought these in December. So I have 3 shares. Average cost is $14.64. It's only 2.2% of the portfolio. We didn't have a gain or a loss today. We're exactly at zero. Total return, we're at $4.57. So they're at $16.36. Our average cost is $14.84. So if I buy now, I'd be buying at almost a $2 markup. But the 52-week high is 23. So at 16, I'd still be comfortable buying it. So I'll show you the difference in what I mean when I say I'm comfortable buying it. So AbbVie, I bought it near, not even near the 52-week low. I bought it like right in between. So $10 above the 52-week low is about where I bought at. But I still had $22 per share of upside in those shares. So I felt comfortable buying it at 72 because now it's at 91. So you only have about $1, almost $2 up from the 52-week high. You see what I mean? So from here, you only have about $2 per share of upside, of potential upside in the stock. So you have more likely for it to drop than it is to go up anymore, unless it breaks 52-week highs, which if it does, that's great. But I have a big margin of safety because I bought, $20 or $18 per share less than what it's sitting at. So I bought it at a lot safer price. But here at SKT, for example, I'm okay buying it because just like I did with AbbVie, it's got a lot of upside potential, even at $16 per share, 16, 17, 18, 19, 20. So I have about $4 per share upside, times that by 10, 20 shares. You could be looking at an $80 to, $100 return on just this $16 stock of upside. And that doesn't even include the dividend. So you see what I mean? So I'm comfortable here buying it, and I just want to show you guys kind of the comparison to AbbVie there. Walgreens is one that I do want to beef up. I have 1 share. Average cost is $54.60. It's only 0.32% of the portfolio. We're down $1.15 in the short term. We are up 8 cents in the long term. So this would also be a buy because it's so close to my actual price that I bought it at. Next, we have ExxonMobil. They've been down for me, but that's okay. So we own 29 shares, 73.50 is our average cost. It's 11.8% of the portfolio. Today we're at $15.37. Total, we're down $108.48. We're down about 5% here, which is fine. So this is one of those that I'd be buying because I'm below average cost on it. Currently at the price, so I'd be really happy to buy some shares. And so that will be one that I will be beefing up, just like Walgreens. ExxonMobil for me is a buy at these prices from my average cost. Then we have Target, which this one's kind of just sky high. I can't buy it at these prices currently. It's just so ridiculously high. This is worse than AbbVie and AT&T. 80, 90, 100, 120, so we're up $40 a share. Yeah, about $400. Up about $37 a share on each, which is even more than the 27 on AbbVie. It's just AbbVie's bigger because it's a bigger position, so I'm up more on that. But per share, I'm up more on Target. Hopefully these fall back down to earth. Like I said, I'm about 30, I think like $32 to $33. 80, 90, 100, 10, 20. So I am up about $34 on these shares, and that means I'm not buying it. So I'm not buying at the current prices. I think that it may not be overvalued. It may be a good place to get in at it, because it's still $6 less, but you're buying it at the high point instead of the low point. So I would try to buy this stock probably about 80, about where I bought it a little higher than I wanted to. But I thought it was a great price to get in at and cost down average, because I was hoping it would go down, but it just shot up like a rocket. So currently I love Target. It's one of those that I'll buy and hold forever. It's a dividend king, but I will not be buying it at these prices because it's so high. But anyways, guys, so going back through, I think Altria is fine. I'm not touching AT&T or AbbVie. SKT is okay. WBA is fine, and ExxonMobil is fine. So 4 out of the 8. So 50% of my portfolio for me currently is a buy. Anyways, I don't think I added anything store I want to add because it will help me in my first month of the year. Beef that up a little bit. Bank of America will help my lowest growth or lowest income month in the third of the year. So in March is my lowest income. 36912 is the smallest amount that I get from dividends. So Bank of America will help. Realty Income is a monthly dividend stock, but other than that, I don't think I added anything to it. I've been pretty strict with the stocks that I add. So I guess I'll wrap it up there. So we're up to 17K, guys. That's awesome. 1732. Tomorrow we're getting $80 more, so that should just put us to 17.1 if the market kind of stays where it's at, but it fluctuates. So we should be above 17K for a while because Altria's been trading sideways, but we will get $81, I believe, from Altria tomorrow. Let me check real quick, because if I got the dividend already, I'll use it. Yep, January 10th, 2020. So tomorrow we should be getting $81.41, and that will be reinvested into Altria, and then I'll have about $30 extra cash. So that's awesome. So anyways, guys, I'll end it there with the dividend announcement. Thank you guys so much for watching. Remember to hit that subscribe button for that dividend guy. I post a video of my portfolio gains and losses every single day, Monday through Friday, unless it's a holiday. So thank you guys for tuning in, and I'll see you tomorrow. Take care.